Welcome back to No Se Habla Taxes, the podcast where a CPA does her own bookkeeping and lives to confess the tale. I'm Melissa Armstrong, fractional controller, solo practice owner, and the financial translator you call when winging it starts to feel risky. And today, we're talking about temptation. So, it's the start of the month. I am doing my usual, logging into QuickBooks, reviewing my bills, checking in on cash flow, and I see it. A couple of new client payments just hit my account. Hey, growth. And then that little voice in my head says, hey, maybe you give yourself a little raise. Just a smidge. You deserve it. Now, listen, I do pay myself, okay? And we'll talk about that some more in a future episode, but I do pay myself, and I think you should too. I am a single member LLC, so when I take money out of the business, it's called an owner's draw, not a salary. I'm not on payroll. And if that last sentence made your eyes cross, it's okay. Just know that what I'm talking about in this episode only applies to certain business structures, not all. And if you've been wondering which camp you fall into, spoiler alert, I'm not your tax expert. Are you surprised? Hope not. I never have been, and I never will be. Proudly so. Anyway, just as I'm reaching for the metaphorical raise, I remember something. That shiny zero interest card I've been floating some expenses on. Do you remember? I talked to you about it a few episodes ago. Well, the intro offer is about to expire, which means if there's still a balance, not only will I owe interest, it will be retroactive all the way back to day one. Not cute. Plus, I haven't set aside my tax stash yet. As a self employed human, I was advised to save around 25% of my net income to cover that delightful cocktail of federal, state, and self employment tax that'll come knocking in April. And don't even get me started on the emergency fund. One of my long term goals is to have between 30 and 60 days of operating cash on hand, you know, for slow months, surprise expenses, or when Mercury goes retrograde and three prospects ghost me at once. So here's the deal, it's really easy to celebrate new income by spending it. We've all done it. But real sustainability comes from playing the long game. Where have I heard that before? Before you give yourself a raise or a bonus, ask yourself, do I have debt about to get more expensive? Have I set aside money for taxes? And do I have enough cash to survive a quiet month? This is not about depriving yourself. It is about protecting your business, the one you decided to create, the one you should be nurturing. And it starts with visibility. If you're doing your own bookkeeping, even just reconciling and glancing at a P&L every now and then, you're already ahead of the game. So yes, I had a moment. I almost paid myself a little extra, but instead, I paid off a chunk of the credit card, moved some cash to my tax savings account, and promised future Melissa she'd get her bonus next quarter, if the numbers make sense. And that, my friends, is financial adulting. Glamorous? No. Does it suck? Yes. Satisfying? Weirdly, also yes. So, if this episode made you think twice about your own payday logic, make sure you are subscribed to No Se Habla Taxes. And if you're navigating these decisions solo, I've got more confessions and bookkeeping real talk coming your way. Until next time, save for taxes, watch your credit card clocks, and pay yourself like a boss, not a reckless intern.